Hello. Hi, Jeremy. I can see you. I
I
think,
can see you as well. Wow, I'm like so big.
yeah. So, yeah, I think you're a little bit too close to the camera,
Well, that's my desk. My
and the light is very bright on you. So that's
Yeah,
right.
not
This
not the
is so much
best.
better.
Oh, this better.
Yeah.
Okay.
No. This is how it goes. So I think, very Monica Singer of former CST, former CEO of Straight was on the previous show. I'm still like on the fourth fifth edition of
Wow.
this. So yeah, learning. So she and the
Wow.
Wi-Fi had some problems. So I'm really glad that I had a chance to fix all of that. But also, I have to apologize to Monica for still getting my tech right. So yeah. So first of all, thank you. I know you're really busy, and you're in Singapore, right?
Yes, I am. I'm here in Singapore. So good evening, good morning, good afternoon to everyone that's dialing in right now.
Right. So, okay. So I know you're a really busy man and you have a lot of things coming. So, TGE soon?
Yes, end of the
Yes. Has
month.
there been an end of the month?
Well, yes, that's right. End of
Okay. Is
Q3.
there an alpha
So
leak? Are we starting with an alpha leak?
maybe semi. Oops, I don't know whether
Okay.
I've asked you
All
something I
right. So
shouldn't be
yeah,
saying.
whatever you're willing to share. So just to full disclosure, I'm an investor in OpenEden, one of my favorite projects in the RWS space. There are others that I'm not an investor in. I think of this quality, like Superstate that Robert Leshner is running, but there are very few projects that I can look at and say, yeah, right, what's going on makes sense. I used to work in tokenization and RWS back at Consensus. So when we had enterprise permission blockchains, remember Corda, Hyperledger Fabric, Quorum, no coiner blockchains, and banks in those days didn't want to have to deal with crypto. So now we have come a long way, and now everyone wants to be on the stablecoin tokenization bandwagon. But you've been around, so yeah. Why don't we start with your story? So Jeremy, how? Tell us more, about how you got involved with crypto and blockchain. How you decided to, build OpenEden, and what you're looking to do with OpenEden.
Oh, sure, absolutely. So I've been a career banker. I started my career in Goldman Sachs back in 1999. Yeah, that's a while back. So spent 20 years in banking and primarily in derivatives, structured products, before I, move on to the crypto world. So in 2020, after 20 years of banking, I took a call from the Winklevoss twins, the Bitcoin billionaires, as they
Hmm.
wanted to build up their Asia business.
Right.
And I think we strike it off, very well. And I decided to
Uh-huh.
leave banking and start the whole
This is
Asia business for
Gemini
it's
Exchanges.
Gemini.
Okay.
Exactly.
Wow. And which year is this? 2017?
2020.
2020. Wow. Okay.
Yeah,
Just
2020.
before DeFi
Right.
summer. Right. And this is when the
Exactly. It, it,
2019 bear market is starting to thaw a bit.
it, it was actually right at the depth of the bear market. I
Oh
remember
my God.
signing the contract with them in March 2020 when Bitcoin, fell below 5,000. And I was
Yeah.
thinking to myself, okay, so this thing can either go very well or it can go very badly.
And you were at
And I
Goldman. Which
decided.
bank were you at?
Now, I left Goldman in 2015, so I was at Leon Tech, a Swiss-based structured
Okay.
derivative business. I
Okay.
was the Asia CEO at the time,
Right.
and I actually now I've already been very interested in crypto because I started investing myself back in 2017. And in
Hmm.
fact, I wanted to leave banking to create my own tokenized structured products.
Right.
Until I got a call with the Winklevoss twins, I decided, okay,
Right.
let's just do
Right.
this
Right.
crypto thing.
Yeah, so you're a
Yeah,
proper
so do you,
banker, and you entered crypto at the just when I think the whole COVID situation, is blowing
yes,
up, and you're thinking,
exactly.
okay, what the hell have I done? Right. Okay. Yes, but that turns out to be the best time to to come into this industry. Right. And
I mean, it's always the
so how
case,
did that
right?
go? Yeah, it's
Yeah,
always the
did very
case.
well. Actually,
Right.
we launched a couple of new initiative, and very quickly took Gemini to become the number one on-ramp exchange in Singapore.
Hmm.
Covering more than one third of the market share. So that was going very well. And it was at the time I decided that, hey, I think there is a need for more institutional grade product to attract greater institutional adoption.
Hmm.
And I
Hmm.
decided to leave Gemini to start OpenEden, with the goal in mind to essentially build a bridge to connect between traditional finance investors or traditional finance products with the crypto world. And that was the original idea to kind of
Is
bring
this which year is
products
this?
across. This was in early 2022. So right
Okay.
at the beginning
Okay.
of
This
2022.
is just before Luna and FTX.
Yes, about five,
You
six
do
months
have you
before
do have
Luna.
some spectacular timing right there. Twice in a row.
I know.
Now
Always
now you're
starting
gonna tell
something
me you
new.
did something in 2007 and 2008 also. Right? Okay.
So,
Okay.
I've
Amazing.
not moved on to the next. I've
Right.
not moved on to the next project yet. So that's definitely the market
Mhm.
still have way to go. And
Right.
but essentially, I was thinking, let's build that bridge, right? Because at that
Yeah.
time, 2021, it was still really predominantly retail investors participating.
Mhm.
And I was really covering a lot of different institutions going to come in on board into Gemini to get them to get exposure to crypto. But clearly there was a lack of more institutional products, and there's a lack of greater institutional adoption. And we decided that, yeah, let's do something that can connect both worlds, and that's how
Right.
OpenEden was conceived.
Amazing. So this is the time when, I remember Polygon, I think 2020 DeFi summer takes off, and then 21, 22, Polygon is announcing these Web2 partnerships. There is interest in Starbucks, Disney, but we're not hearing a lot from TradFi, right? I think there is like Gary Gensler is out there in 2022, and he's upset again with the industry. So the
Choke
last thing
point.
anyone wants to hear is TradFi coming into crypto, which is completely different from how it is right now. Right. Okay.
But
Okay. And you decide to do
but that was
something which kind of at that time people are really pessimistic on, and you say, no, okay, wait, this is gonna happen. Okay, that's
yeah.
brave.
I mean there was an opportunity because up until like after Luna FTS, obviously we all knew what happened, and then obviously inflation started to rise, right?
Right.
Across
Right.
everywhere, and
Yes.
and then the crypto market started coming to a slump. So all
Hmm.
these attractive DeFi yield vanished overnight, right? This
Yes,
had
I launched
ETH.
Aave Arc at that time, by the way. So, I was at Aave and we launched Aave Arc, and we got 30 million TVL from some of these, as I may say, suits of friends of ours. And then everything blew up. Like Aave was still strong and holding up, but Luna is gone, FTX is gone,
Yeah,
Celsius is gone, BlockFi is gone, and obviously DeFi
and,
yields are exploding.
and then
Amazing.
Genesis.
Right,
Yeah.
right, right.
So
And
so
so
you,
so what do
you
you
all of a
do?
sudden yeah, so all of a sudden it becomes very interesting, right? Where
Right.
DeFi yield started to come down and the TradFi yield started to go up. The
That's
the
right.
unbelievable thing happened when there was a crossover, right?
Yes.
Where risk-free rate was above 5%, and then you have Aave compound rate, at 1%.
Yeah.
So it kind of like completely doesn't make
It went
sense,
from
and that was a down
17% to 1%, I remember. Right.
exactly,
Right.
and it kind of moves so
Yeah.
quickly, right?
Yeah.
And but the crypto people, still want to stay within crypto. The crypto natives want to keep their stable
It's
coins on
it's
chain.
more that no one wants us, right? It's like because you can't get a job.
Operation choke point as well. You're right, and also the
That's like
accessibility, right, of getting a bank account.
right.
Getting off ramp is extremely
Right.
difficult.
Right. Yeah.
And so what we were thinking about, why don't we bring traditional finance product, into the crypto world? And
Yeah.
that's how the whole idea was conceived. That hey, let's bring
Right.
the easiest to understand product, the most simple, the most liquid, risk-free
Right.
rate, U.S. Treasury, and
Yes.
that's how OpenEden, created our own asset management company, and we set up a fund, and then we tokenize it. Everything was kind of built in-house. We got a fund management license here, and that's how our T-bill product was set up. That
Right.
was in early 2023. And then
Mm-hmm.
we also then want to add greater legitimacy. Like in
Mm-hmm.
addition to having a regulated fund manager, a regulated fund vehicle, We also got a Moody's rating. We were the very first tokenized money market product that has a Moody's rating. So it was in
Wow.
June 2023.
Right.
And yeah, so we just want to make sure that we do everything really, really properly. Making sure that it's fully licensed, regulated, bankruptcy remote, and properly audited, credit rating. And then we present it in a very DeFi-centric user interface, fully automated by smart contract. We're the first tokenized product, money market product that is fully on-chain, 24/7, instant settlement. And we did it on
Fully
day one.
on-chain, instant settlement. What was the third thing you said?
And fully regulated.
Fully regulated, right?
And with
So,
the Moody's
so,
rating.
and with the Moody's rating. So, and I think there are a few things you said in there that I think a lot of crypto people might be new to. Because say last year was all about meme coins. Now I think we are farming perp dexes. So that's one current, right? We are going full degen, and I mean there's a bunch of crazy stuff out there too, which we're not going to talk about. And there is like innovation exemption and whatnot. But at the same time, what's interesting is that now we are hearing a lot of favorable noises from the SEC, right? There is like this innovation exemption announcement that came out today, and so on and so forth. So, but I think a few things you said in there, I think people don't necessarily realize, why they're important. So I'm gonna drill down into those, right? Why do you need a fund structure?
Yeah, so it is important for us to use a fund structure for two main reasons. Number one, it is the most recognizable vehicle that has been around for a long time, and it is a structure that regulators are fully comfortable with and has a proper set of frameworks to guide how an asset manager can manage the product subject to certain investment criteria. So everything is tried and tested.
So what type of fund is this? Because there are many types of funds, right?
Sure. It is a registered professional fund that is set up out of the BVI. And we were very happy. We're very happy that we were the first to do that because from that point onwards, a lot of the other very well-known tokenized money market product like BlackRock and whatnot, they all are using the same kind of setup out of BVI.
And you're based in Singapore. And
yes,
most of your banking career is in Singapore?
In Hong Kong and Singapore.
In Hong Kong and Singapore. So why is the fund in BVI?
Well, BVI, for offshore fund vehicle, and in BVI, Luxembourg, and Cayman, these are, the more well-recognizable fund vehicle. I mean, there are certain fund vehicles structured out of Hong Kong or Singapore, but they are relatively new. So OpenEden, our audience are global.
You have to move at speed, and the audience is global. That's right.
Correct.
Yeah.
And also, we obviously got a legal opinion out of BVI that whatever that we're doing is properly kosher. Got it.
No, I have used a BVI fund structure for a small venture fund, which is different from what you're doing. So you tokenize. So when you say tokenization, the tokenization is the tokenization of this fund entity, like you tokenize shares in the fund.
Exactly. So we tokenize units of the fund, and investors essentially will get the financial or economic interest of the underlying portfolio's NAV.
Okay. And
so it's very clean. It's very
So what's the fund holding? The fund is holding treasury bills.
The fund is as of today. Well, first of all, the fund is about 2 months ago. There was a major upgrade, I call it. Essentially, we have a strategic partnership with Bank of New York, BNY, and they have taken over. Yeah, so Bank of New York, we all know, is the oldest bank in US, and it's the world's largest custodian bank. Yeah. So they have entered into a partnership with us where they have taken over the whole fund as the fund manager. So they're fully managing the underlying portfolio.
Right. So they're holding the underlying portfolio in custody for you?
Both. Okay. So essentially, the custodian part is holding the underlying securities, all the short-dated treasuries and dollar is all held with BNY as the custodian. And the investment management division, BNY Investments, are the investment manager. So it's kind of both sides.
Oh, wow. Okay, so
both managed and custodized by BNY.
Right. So for people who don't know, BNY and State Street are two of the biggest, regulated global custodians. What that means is
Right.
that most of the securities that you hold in your account are essentially, secured by two of these custodians directly or indirectly, and they also do a lot of corporate actions processing, right? Which is stock splits, dividends, managing all the cash flows. So they kind of a lot of the securities markets work safely because of these global custodians, and I think you can tell us more about it in a few minutes than I know. So your BNY is holding both the fund, units, and sorry, the investment division, management division is managing the fund, and
Correct.
the underlying securities, which are what, treasury bills or treasury bonds, what sort
Treasury
of securities are
bills, very
treasury?
short
Okay,
dated. Yeah. So
very
the
short dated.
average maturity is like less than 60 days. So very short dated U.S. Treasury bills, and they are all
Okay,
held in the custodian,
right.
bank of BNY, which
Wow.
is the world's largest, right? They hold 52
Yeah,
trillion
this
dollars
is
of
as
asset
safe
under
as it
custody.
gets, right? Yeah.
Yes,
Yeah,
it
yeah,
can't get
this
any
is as
safer.
safe as it gets. BNY is a big brand. There are intermediaries in the world that I think we can remove, and there are intermediaries in the world that add a lot of value. So I just had this slight debate with Monica, and I think she conceded, the former CEO of Straight, that global custodians are some of the intermediaries that actually add value to the securities, settlement process, and to the end, and to the end investor. So that's amazing. So now you've got the framework fully working, right? So you got S&P to rate, to assign a rating to your fund. You've got like the a really safe setup for the underlying assets and for managing the fund audits, all of those things, right? Which
Correct.
making sure that the NAV is correctly reported. So you've got the regulatory infrastructure. What else is there in the regulatory infrastructure?
I think it's actually that is the main thing because the manager is a regulated entity with BNY. That means the whole portfolio management, the custody, the valuation policy, everything is under very high regulatory reporting requirement. So it
Yeah.
needs to have audits, and especially we are rated by Moody's and actually also S&P, which we have not formally announced. We got a double A plus rating from S&P. So
Okay.
so that's something that we'll share.
Right.
So so because of
Yeah.
all these
You
things, we
probably
are
wouldn't have got it without BNY, would you?
yeah,
Okay.
that is partially true as well. So the
Yeah.
whole setup, right? The way
Right.
that the
Right.
whole
Right.
thing
So
is
which means
structured,
there
the
is almost no
capitalization.
credit risk in essentially holding your tokens.
No,
As
there
in,
wouldn't be any credit risk at all.
that's right.
The only
Yeah.
credit risk
Because
that
you
any
can't
investors they
rug, the
can
custodian is not going to rug. So, just in
cut.
plain crypto English, which means when you hold the tokens, it's as good as holding, the asset. It's almost safer than
Absolutely.
self custody in this case, because, with self custody, you could end up with sort of the tokens like crypto tokens. I have lost a bunch of tokens to rug, but in this case, you kind of using the infrastructure, the essential infrastructure of securities markets, the good parts, to make sure that there is no credit risk. There is no, like, no one can rug. If you can put
Correct.
in $1 billion tomorrow, and it'll still be safe.
Absolutely. Absolutely.
Right.
And so essentially that is how it's being structured. The regulatory framework, regulatory reporting, and all is for protecting the holders of the token, which are essentially investors into the underlying fund, just in a digital format.
Right.
So that
Right.
forms a very strong foundational product
Yeah.
for OpenEden to build on top of that
That's
our
right.
other products.
Yeah.
And obviously, very happy to share about the new product that we launched early this year,
Yeah.
Open Dollar USDO, which
Uh-huh.
is fully collateralized by a basket of tokenized treasuries, including our OpenEden BNY T-bill.
Oh, wow.
And
Okay.
why that is really interesting is because now for the first time you have a stable coin that is giving you a full transparency of the underlying reserve because the reserves are all on-chain asset. So there is at no point anyone can throw some FUD and say that hey, the reserves
Right.
are not
Right.
valued
Right.
at this. There's under
So
collateralized. We have a chain link proof of reserve that can show you 24/7 live, publicly verifiable collateral reserve
right.
backing
So
the stablecoin.
if you remember the debate, there was some debate between the Vanek guys and the DeFi Llama, because DeFi Llama guys just posted a tweet saying, "Look, Figure did an IPO. They have this RWA blockchain called Provenance, and I'm not going to flood
Yes,
anybody, but I mean, and DeFi Llama had a good point, right? Which is we can't really know whether this TVL is verifiable, like how much of this TVL is real or not. And sure, the
correct,
IPO went very well, but I mean, the point of crypto assets is that everything is on chain, right? As in it's natively on chain, or it's equivalent, as in when you say I have $50 in my wallet, then I have $50 in my wallet. When you say I have 5 Bitcoin, I have 5 Bitcoin, right? So you want to get as close as possible to that level of
yes,
verifiability. And if you can't
correct,
verify what the RWAs are worth, or where they're held, how many of them are actually real, backed by what, then RWTVL can be quite inflated and unreliable. And so they weren't. I think DeFi Llama weren't so like pointing fingers at Figure. They were like, okay, how do we know, right? And that's a fair question, because the point of DeFi is to create this level of transparency. So you kind of thought about that chain of custody, and you got the best of crypto. Like you've got Chainlink to do the proof of reserves, and you got these
yes,
the securities market, the best part of securities market infrastructure, to make sure that you have asset
correct,
protection, you minimize credit risk, you get the right ratings, you get audits. So you got a whole bunch of stuff now, and so now you've created a regulatory framework, right, or the underlying infrastructure on which you can launch new products.
correct.
So the first product is
Exactly.
T-bill, the second product is USD zero. What else is coming?
USDO.
USDO. Yeah, right. Sorry, not zero. We don't want USD to go to zero. Even the gold is going up. Right. So
So
USDO. So what's coming next?
so with USDO, then essentially, we've built we built a stable coin that not only is fully collateralized by transparent asset. Another really interesting thing is that it also distributes yield. So
Right.
USDO in itself, is a rebasing token. It will rebase on a daily basis, based on the underlying yield of the tokenized treasury portfolio, which stands at about 4%. So the way we think about it is we're combining savings and payments into one token. So it is a payment token that also generates yield for you. And that will essentially be used as a core currency or core digital asset to allow our users to deploy that and invest into other products that we'll be launching. So, in the next quarter, you'll see two higher yielding product that OpenEden will launch. One
Uh-huh.
is a yield product that is derived from crypto yield,
Right.
consisting of multi strategies like cash and carry,
Uh-huh.
collateralized, lending, liquid staking, and things like that.
Right.
And the other high yield product is a TradFi product that we're working together with BNY. We'll be bringing a BNY high yield bond fund product on
Okay.
chain.
Wow.
So we're going to introduce the two set of higher yielding
Right, which
product,
is
but
quite
with
important,
different risk
because
profile.
looks like Mr. Powell, is cutting rates now. So T-bill
Yes,
rates will go down. Aave, hopefully Aave will go up, right? I don't want to shill
it
my
should.
bags, but so, so, so the demand for DeFi especially goes up, and when I'm sure Circle will probably make less money from T-bills. I don't want to fight them either; they're really great people. But
Mhm.
hopefully some of these Aave will hopefully be a particular beneficiary from all of this. But then I think it's a challenge, right? If you're offering T-bills and T-bill demand goes down, then you kind of need other high yield, potentially even credit sensitive assets, securities in the future, right?
I mean, the way we think about it is it's not exactly a knee jerk respond, right, to Fed cutting rates. Because if you look at on a standalone basis, a USDO product, whether rate is at 5% or at 2%, it doesn't matter. You will still have its core user base because USDO is essentially your cash alternative.
That's
So
right.
same thing in the real world,
Right.
you will always have some cash, and your cash
Yes.
you put in the bank,
Yeah.
even though
I
you pay
mean,
very little interest, you still put in the bank.
money market balances are at the highest they've ever been. Was it
Yeah,
seven,
$7 trillion,
three
right?
trillion, 7 trillion? Yeah, that's
Seven,
crazy, right?
7
Yeah.
trillion.
Yeah,
Just two
seven
years
trillion.
ago, it was like 3 trillion.
Okay.
So you'll always
That's
be
just
there.
one NVIDIA,
And
right? Okay. Right.
yeah, so they'll always be there. So for us, it's more like, okay, we're
Right.
gonna add new suite of products so that people, they can move around and can do different asset allocation. And obviously, I think the timing is, it looks pretty good. With rates coming down, and if the economy stays well, then credit spreads
Yeah.
shouldn't widen, and high yield bond usually should
That's
do well.
right.
And obviously,
That's right.
bullish market, DeFi yield should also do well. And that's why we thought, okay, let's offer different products for different people at different risk profile.
Amazing, amazing. But I think what's cool about this is how you've done it. It's because you've done the hard yards first, right? You could have launched like a FOMO product and taken advantage of the hype around some of these stable coins. But I think you've built the securities markets, the best of infrastructure first, and that kind of sets up that should reduce your cycle time for launching new products, right? Because what you're
Yes.
fundamentally doing is you're changing what's in the basket. Like, so you set up a fund that has, currently you have a fund that has T-bills. Tomorrow you could have a fund that has, I don't know, T treasury
All kinds
bonds,
of different.
right?
Yep.
Different HQLA, and then in the future you could put in some commodities, securitized commodities, or you could put in other types of, potentially equities, right? I mean, because right now there is a
Equities,
lot of
private credit,
buzz. Equities, private credit, private equity. I think
anything.
there's a lot of cool things you can do on this foundation, which is not just technology. There's a lot of, I
Yes.
think, like regulatory transparency, audit, like off-chain transparency that and security, right? When you say asset security and asset protection, that kind of goes into it. So that's quite amazing. Now, so Genius Act, and the timing is good. So Genius Act is here now, but they don't. Looks like the banker lobby doesn't like interest-bearing stable coins. So what does that mean for you? Of course, it doesn't like interest. And
Of
Brian
course,
Armstrong
right?
is really upset about it.
The banks are very happy with the Genius Act, obviously, because they're
Yes, of
all
course.
afraid that people are going to move away, from deposit and going to all these yield-bearing stablecoin. But
Right, right,
but
right.
the way we look at that, is, what are we building here, right? And who are we building this for? If you
Right.
think about, what I'm going to share next, might not be the most popular opinion, but if you think about the usage of stablecoin, is really primarily for people outside of America, the people that actually really want access to dollar, whether are they in emerging markets or in places where there is this difficulty of getting banking access. And that's why we see Tether being used across emerging markets. And
Yeah.
if you think about it, the euro dollar market, as we call it, right, US dollar that's in circulation outside of America, is a much bigger market, right? Depending on how you evaluate, it could be like 10 to 15 trillion dollars. And I think that is really the market that we want to first address and first target. Giving
Fair
it,
enough.
number one, not only access to dollar, but also access to dollar yield, all in one product. So we'll wait,
So
and
So when you say yield, it's just one bucket with both principal and yield, or are you going to strip principal and yield in the future?
the way that USDO is being structured now is that you hold USDO in your own wallet, whether it's your MetaMask, your Fireblocks. You don't have to do anything. You don't have to stick it, and it will rebase on a daily basis, i.e.,
I
you
see.
increase in number of USDO. So literally, you become your own bank, and I think that's really
Right.
cool.
It's a
And
bit
then you
like
can obviously
holding
use
Aave
it.
USD, right? But except now you have like it's backed by real world assets.
Correct. Fully backed by
Right.
real asset that is fully transparent and fully
Right.
verifiable. Or you can do a wrap
Sounds good.
version. You
Yeah.
can do a wrap version called CUSD, which compounds the yield. So the price of the token goes up while the unit stays the same. So that is more suitable to be integrated on the DeFi, which USDO is on Pando, Napier Spectra, and then we recently also going to work together with Aave to allow USDO or T-bill
Yeah.
token as a
Yeah.
eligible collateral. So yeah, so it's very composable.
Yeah, and Aave
And
Horizon, I think, is the new
yes,
Aave. This
correct.
Horizon is quite focused on, I think, real world assets. So that
RWA.
should be another. Yeah, yeah, and it's doing. Fortunately, no Luna has blown up this year, so at least we got to we crossed 100.
Well, as long as the token is backed by a real asset, that's fully verifiable, and you know that it's held
That's
in the
right.
right custodian, then you should be okay.
Thankfully, no one
And
is
we
doing
are
algo stable coins
we
as
are
far as
working
I know.
together, right? You know,
Right, right. But I
with
think
RBA
one of the
Horizon.
things I like about the Genius Act, right, and look, the Democrats weren't completely wrong, right? I think they referred to wildcat banking. I remember during Great Depression, there were all kinds of these small town banks, and when the Great Depression hit, a whole bunch of them were holding securities or had terrible asset liability management and really got wrecked. I mean, they ran out of capital, and so there is a people don't realize that a lot of stable coins are essentially the same as lending, whether it's crypto lending or securities lending. When you say stable coin, you're saying I'm like giving my dollars to Circle, and then Circle is giving me tokens, right? So or
Yes,
someone is giving you treasuries, and then you're giving them tokens, for example, or I'm giving you dollars, and then you're investing those dollars in treasuries, and so there is a so lending in some ways is the same as stable coins, right? So there is collateral, and then there is issuance of this token against the collateral through some
yes,
legal structure, and that's kind of what we're doing with tokenization, right? And that's true for pretty
correct,
much everything, right? Whether it's securities or so that's you take an asset and you issue a token, and then you have to make sure that you safe keep the asset, right? You don't
correct.
Nothing goes wrong with the asset. And then the second thing is what you're highlighting, which is transparency, right? Which is, I think a lot of there was this massive debate on Twitter about I say massive because I think maybe I'm too interested in it. X stocks, Kraken's X stocks, right? Are these real stocks or are these derivatives? Well, first of all, what are your thoughts on that? Kraken's X stocks, are those stocks or are those something else? As diplomatic as you can
I,
be, but yeah.
I mean, it's not just Kraken's X stocks. There are a couple of players now, right, that offer tokenized equities. You've got
Right,
Binary, you've got Ondo, and then Back Finance. I mean, they're all in different shape or form a representation of the underlying securities.
right,
Now, whether is
right,
it really stocks or not, then it depends, right? If you're holding X stocks, do you have voting right? Are you able to be invited to the AGM and have the free lunch? I don't
right.
know. But what it tries to do is to give you exposure
Right.
to the underlying price movement of the
That's
asset.
right. Right.
I haven't
And
read
so
into the
you,
legal docs, so
right,
I can't tell you.
right. So I think what people don't realize that every asset, corresponding to every asset, there is a contract, right, which is a set of rights and obligations. So, for example, when I bought my house here in Dubai, then I get some rights. Like there is an underlying land which is potentially freehold or leasehold. I might get the land for 99 years or for forever or not at all, and those are different rights, right? So similarly,
Yeah,
I might have an obligation which is pay maintenance charges for every year or every month, and that's an obligation. So every asset, similarly equities, when I buy a share, then I have some rights, but and then I have some obligations, right? I have a right to get a dividend when there is a dividend if it's common stock, and preferred stock is something else. So this tokenization, the interesting thing about tokenization is that depending on how you do it, I may or may not have access to all of the rights and obligations in the underlying asset, and I might incur additional liabilities or might not
yes,
have the same liabilities at the underlying asset. So it's almost a different contract, right? So, or it's some
Y-
like a variation of the contract, and then the enforcement comes into question, and so on and so forth. So when Clark Thompson, Monica Singer, and I were doing Asset Factory for Consensus in the no coiner blockchain days, I think it was very heavily focused on capturing some of this legal nuance of different assets. And now I think for now so a lot of this debate is about, but I think so how do you kind of what do you do to make sure that the let's say tomorrow you start to tokenize shares in Google, right? How do you make sure that the token is as good accurate a representation of the underlying Google's common stock, Series A or whatever, the Google Class A common stock? So how do you make sure that that's as accurate as possible, or as transparent as possible when it's not the same thing?
Well, first of all, I am not saying that I will be tokenizing equities, but I think you bring up a good point, right? It is extremely important in terms of the whole issuance legal structure, because everyone can be tokenizing a similar underlying, but the way that you structure the issuance can either add or subtract certain counterparty risk.
That's right.
And I think that is a part that a lot of investors are not aware about. Even using stablecoin is a very good example, right? There
Yeah.
are most of the stablecoin issuer out there, including the two largest incumbent. The issuing structure is not bankruptcy remote. So bankruptcy remote basically means that the IOU is it secured? The collateral, is it securing only for the token holders or is it not? So bankruptcy remote vehicle
I
meaning that
see.
in the collateral only belongs to supporting the token holders.
And no one else
But
has
if
a
it is
claim
not
on it.
bankruptcy remote, yeah, if it's not bankruptcy
I
remote,
see.
meaning that the issuer.
So what can go wrong? I remember when Circle's USDC, I think they had one of their banks had trouble,
Deepak,
and the
yes.
DPEC 30%, and that was the best time to buy Bitcoin because there was a bailout.
Oh,
Right.
or best time to buy
Right, right.
USDC as well.
That's right. That's right. So when we say bankruptcy remote, so there is an entity, like a legal entity, that's holding what, the dollars or the
That is holding
treasury
asset.
bills in this case. What are they holding?
Yeah, so depend. I mean, Circle holds cash, bank deposits, and also a fund that
Mhm.
is holding treasury bills. Now,
Right.
what I mean by bankruptcy remote is that if for whatever reason the issuer, let's not name any name particular, but any issuer, any stablecoin issuer, if they go into
Mhm.
financial difficulties, and if the stablecoin that they issue is not through a bankruptcy remote vehicle, they can technically dip their toes, dip their hands inside, and take out some of the collateral for themselves.
And we have seen
Now,
some drama with crypto collateral in other situations like Celsius, FTX, right? And obviously, there is no risk in a bull market, right? You and I both worked for banks. There is never any risk in a bull market. But we have seen a lot of drama with Lehman, LTCM, but more recently in crypto with the BlockFi, Genesis, Three Arrows Capital, whatnot. So okay, so bankruptcy remote, and then in FTX's case, Sullivan and Cromwell came in, made $1 billion, and the token holders kind of got wrecked, right? I mean, they got the last cycle prices on their crypto. So there is a whole bunch of legal stuff that can happen, and then in Celsius's case, I think they were bankruptcy courts ruled that some depositors did not have a claim on the assets they had provided. So a lot of drama can happen, which obviously I
yeah,
think people don't want to think about. So bankruptcy remoteness. How do you
lawyers make
ensure
all the
that?
money in those scenarios.
Yeah, you had to
Not
get
you
old
and
before
I.
you figure this out.
Lawyers always win.
It's always great. So I have memories of when I think on the desk, Goldman, we at the last minute kind of had to stop payments from going out to Lehman, even though the assets, the money was owed to Lehman. You're like, okay, this thing is going down, so why are we even paying? We'll deal with it later in the court. So so
Yes.
people don't. Once you bring in the real world, it gets really interesting, right? Because now the credit risk is not to the smart contract; it's the credit risk to a chain of underlying entities, and who all have credit
Sure.
risks relative to each other, right? So then you kind of have to track the chain of custody, bring transparency to all of that, and obviously, I'll say this again: there is no risk in a bull market. But when that music stops, then obviously these things. So how do you kind of bring bankruptcy remote structures? What do you have to do?
Yeah, so the way that we structure that is for USDO, where OpenEden, we have a digital asset business license in the Bermuda as a token issuer. The same
Mhm.
regulator as some of the largest crypto companies like Circle, Coinbase, Kraken, and whatnot. And the way that
Okay.
we set up the company is called SAC in the Bermuda, which is called Segregated Account Company. And it is a structure that need to be signed up by the Minister of Finance, which is also the Premier of Bermuda. And we will use the SAC as the issuance vehicle for USDO, because the law heavily structured that the issuance, any collateral that is used to back the issuance can only stay within this vehicle. It cannot be extracted by anybody else. So always going to be there, and there's proper accounting, audit on a monthly, annual basis to ensure that legally nobody has the right to extract any of
So
this
the
collateral.
assets are unencumbered. This entity itself does not have, in case of sort of bankruptcy proceedings or claims being made by third parties, these assets are not
ring fence, completely ring fence. So it has its
legal.
own set of asset liabilities, only for itself. So that provides a maximum security for token holders, because they know that whatever collateral that's backing that token will always be there backing the token. No one has any claims on that. No one can have any claims on that. So that is at the issuance level that we make sure there's protection. And then obviously as the collateral level, we talk about it, right? The underlines like the OpenEden BNY T-bill product, which we really explained that, it's kind of structured in a way that provides maximum security. So that is how we want to make our product unique. Yeah.
So who are your users? As in, the users are sending you what, USDC or USDT or or dollars? How does this work?
Yeah, so I think the beauty of product is that it is servicing both we call the crypto world and the real world, and users or clients can send us either dollar or stable coin to mint USDO. Now, on the crypto side of the things, it serves two buckets, right? It is integrated into DeFi. I mentioned before the Pandos, the Aves of the world, and also into CeFi. Most recently, USDO has become the first yield-bearing collateral that's accepted by Binance through their off-exchange settlement structure. So today, as an institution, you can hold USDO off-exchange in a designated custodian, and Binance will give you a 1:1 mirror asset onto your portfolio margin account, and you can trade perps, futures, derivatives, while all your collateral is sitting outside. So this is major, because now you don't take out any exchange risk, so you don't have to worry about another FTX happening. And then two, your collateral is generating yield for you, unlike the usual
you're gonna have to walk me through that again, because
USDC.
This is really cool and it's a little bit complex. So can you please just walk me through this again? How does this work for Binance?
So today, if you trade on Binance, you will deposit your collateral, right? Let's say you deposit your USDT into a Binance account, and then you can use it to use as collateral to trade. Now, what Binance has recently announced in partnership with OpenEden is they're allowing their user, well, mostly large institutions, to hold USDO, which in itself is yield-bearing, as a collateral, but off exchange, so outside of Binance. So there are a few designated custodians such as Sifu, Signum Bank, and I think BBVA, where you as a client of Binance, you can hold your USDO in your own segregated wallet, and Binance will then give you a 1:1 mirroring asset on your portfolio margin account, as if your collateral is in your portfolio margin account physically, but they'll just give a mirror asset. And now you can use that as a collateral to trade, as like how you have been trading.
And if I withdraw the assets in my underlying account, then Binance automatically reflects
then
that?
Binance will adjust it. Exactly.
And how does this work?
And
Does it work through smart contracts, or what's the technology
No,
for?
it is through a tri-party agreement between Binance, the custodian, the designated custodian, and the client.
I see.
So there's a lot of work that kind of goes behind, right? The custodian is fully integrated with Binance to be able to.
And this contract is like an ISDA. Is that like an ISDA standard agreement, or is it a CSA, or what is it?
It is more like an MLA, like a master loan agreement.
Like a master loan agreement.
Because essentially what Binance is basically saying is that Binance is lending the client asset
Right.
onto their exchange, and Binance would then recognize the collateral that's sitting outside of Binance on the designated custodian as
I
collateral.
see. Wow. 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 Okay.
So essentially,
And
that you
what
and I
was
know
the,
that
what was
that's
right? That's amazing. So, but what's the leap of faith here? How do you get Binance to agree to this?
it was. I mean, obviously, Binance, they spend their time to do quite a fair amount of due
Right.
diligence
Right.
on
Right.
USDO,
Right.
on OpenEden, until they get
Yeah.
comfortable
Yeah.
with USDOs. Because if you think about it, essentially Binance is going to take on the USDO's risk. Because if
Mhm.
there's any liquidation, if client doesn't top up, Binance
Yeah.
is left holding the bags. They'll be
That's right.
holding
That's
USDO,
why
so
I'm
they
asking.
need to be
Right.
comfortable.
That's
And
right.
and yes, so the treasury team had looked through everything, and they got very comfortable. And we're not surprised they got comfortable because like what we've described, right, how USDO is being structured from a legal structure standpoint, how it's being collateralized and what are the collateral assets. And we're very proud that we became the
It's
first
incredible.
yield bearing
It's
collateral to be
incredible.
accepted.
Yeah, I worked for Binance for like 6, 7 months, and I know how meticulous CZ is around these things. And yeah, I mean, is one of the smartest people I know, especially on the risk side, right? So, and I think people don't realize how like smart he is around risk. So, credit risk, for example,
I echo
and
that.
it's incredible. So if he's signed up, then this is a big deal. I mean, I don't think it's the issue is this. It's really hard for a lot of people who don't come from TradFi to understand why this is a big deal, right? Because
Yes,
in crypto day to day,
correct.
we don't deal with credit risk. So the only time we deal with credit risk is when a smart contract rugs, or when some team that's holding keys to a smart contract kind of misbehaves. But normally we don't deal with credit risk as much. What do you think?
There's on the DeFi side, right? But on the CeFi side,
Yeah,
people might not be thinking about credit risk, but actually every
yeah,
single exchange user, they are taking on the credit risk of the
that's
exchange,
right. Yeah, that's right. But
which
the
in turn
exchange
doesn't
guys are
work that way.
thinking about credit risk, right? I think Binance, CZ in
Oh,
particular,
they for
yeah,
sure they are thinking about the
they
credit risk
live
they're
this stuff,
taking on
right?
from their client because they're
Yeah,
lending their client, so they take
and
risk
these
on
are
the
large
client.
amounts. Right? It's a small,
Yes,
it's big money, and especially in a bear market, as you kind of get these cycle turns, these things get really really interesting.
correct,
Yeah. So and right as okay, right. So I think what's cool about this is that you can scale it up very quickly because you've done the legal infrastructure, you've done the custody and audit infrastructure already. So and you have the on-chain infrastructure. So you kind of got
correct,
the different parts sorted. So which makes it possible to scale this type of architecture to very large numbers, right? Because you can't really scale. A lot of things have scaled a lot in crypto, right? I mean, I'm very happy for it, but I think it's still a 4 trillion market, right? Stable coins are still only a 240 billion market, whereas, as we said, money markets are a 7 trillion. Money market
correct.
funds are holding 7 trillion, where is 7 trillion and where is 240, 250 billion. So if you're going to go from 250 billion to 7 trillion, we're going to need to worry about all of this. So yeah, so congratulations on figuring all this out. And how long did it take?
Well, we started building OpenEden beginning of 2022, so now
Right.
it's like 3.5 years. So it does take time, getting
Right.
licenses. Every
My
single
god.
license take at least 12 months to
Yeah,
obtain. So we took the long way, we took the
you
painful
took the
way,
long road.
but we
That's right.
believe that it is a long game, and we believe
It
that
is a
when we
long
do
game.
something, we are gonna scale into billions and the tens of billions.
Yeah.
So it's totally fine to kind of do that because we're not thinking
Yeah,
about just
but
creating a product for 100 million.
right. So and yeah, this is kind of sometimes you have to you can only go fast by going slower, right? So especially in TradFi and legal infrastructure, I used to work for Barcap, and we had a fantastic front office, right? We used to make money hand over fist, but we kind of messed up the back office a little bit. I'm not going to say we. I was one of the risk guy, middle office, back office guy at that time, but there was not that much by way of tech and risk infrastructure. So guess what happened? We had LIBOR. So and the rest is history. Now Bob is back, and he's building this, one of the best front office leaders ever, right? One of the finest bankers of his generation, Bob Diamond. But amazing guy. But then he got blamed for things he didn't do, right? Because the back office was kind of a bit shaky, but the front office was incredible. So I think what you've done is you kind of built the infrastructure, what we call in banking middle office infrastructure. I mean, obviously you're doing it far more simply with blockchains and all of that. So you're kind of taking
We
out a
call it
lot of the
middleware, right? To make it sound
yeah,
sexy.
you're taking a lot of the middle office nonsense, reconciliation bullshit out. So
Yeah.
so that's pretty cool. I think most people won't relate to what I'm talking about, but I've done end user computing spreadsheets. So okay. So anyway, okay. So where do you go from here? How is the TVL looking?
Yeah, we have two products. Our TB product is both product around 250 million each. And
Oh
if you
wow.
go to rwa.xyz, you'll be able to see how we progress. And how do we go from here? So we have built the whole regulatory compliant issuance vehicle or framework. We've got our own very strong tokenization tech stack.
Yeah.
And then we have a very strong foundational, TBO, product. So what we have built is now a very comprehensive end-to-end tokenization infrastructure.
That's right.
And the next step for us is now we have become a Shopify of RWA tokenization. And what do I mean by that
Shopify
is we
RWA tokenization. I love that punchline.
correct,
Right.
correct.
The
Because
tagline.
we are now being able to enable our partners, whether it's asset managers or other protocols that need to, for example, issue their own stable coin or want to bring their products or asset on chain. They just come to OpenEden and we have the whole suite of end-to-end one-stop shop. They come to us, we can do everything from issuance to tokenization to distribution.
Amazing.
And that is really how we're beginning to see that happening, right? BNY is the first partner, but there are many more that are coming through.
Right.
And then
Obviously, if
on
you're
the
a
DeFi
fund
side,
and you're a finance guy, you don't necessarily want to build all of this for yourself, right? I think it's
precisely,
yeah.
I'm building
Right.
a platform. I built it for myself first, just to show that, hey, we know exactly how to do, because you got to get your hands dirty. Then you know all the different intricacies and all these
So I have a
operational
question for you.
stuff.
I have a question for you. So you're building a business which is like a very well structured RWA tokenization platform business, and it's really highly scalable because you've done the hard yards, right? I think it's very hard to scale things in finance if you haven't got the. You can scale, but these things don't usually go that well if you scale without the underlying infrastructure, as I
Start to
mentioned
break,
about
right?
LIBOR and bar cap. Yeah. So,
Yes.
so why go through the why token why token and not an IPO at some point? So what's your thought process? Why do you want to go down this path versus that path? I mean, it's not either or
So
anymore, right?
yeah, exactly. It's not either
It's
or,
not
right?
either or anymore,
It's definitely not either
right?
or.
Right.
Well, we have been receiving very strong support, from our obviously our crypto audience,
Yeah,
which has been the, I would say, initial
that's right.
users of our product, and we want to reward them. We want to build a community, and that's why it's important that we start to have a governance process, right? That
Right.
the community can begin to
Right.
kind of
And also
participate.
incentives for users and partners,
Yeah,
and right, you want the OpenEden assets, tokenized assets, to be used across DeFi, which is kind of the point, right? Because there are other like-minded people like Superstate and Aave Horizon. There are others who are kind of closely now. I think the Tether guys have also come a very long way. There's a bunch of people who are kind of, the Stripe is coming online, building their own chain and things like that. So there's a lot of cool things that are going on, and Kraken wants to do tokenized stocks. Okay, I get it. So you want
yeah.
you want, so you got enough to give comfort to TradFi. Now you want to also okay, I see.
We
Now
want to
you want to
cement. We want to cement the. We want to cement the way we work or we partner with our community in the
that's right.
crypto world, and
That's
a
right.
lot of them like to live on chain,
Yeah,
and whether it's
I'm one of them.
governance,
Right.
decision making,
Yeah.
yeah. So I think
Right.
having that token can galvanize that relationship. And then what happens on the TradFi world? Looks like our host has left me, and I need to kind of carry on this show by myself. But in any case, if you're still here, I'm happy to maybe just give a closing remark. Is that we believe that moving forward, everything or anything that can be tokenized will be tokenized. It's just a lot more efficient to live on chain, to have the ability to receive and send asset on a 24/7 instant basis, to be able to verify your asset on chain without going through any middleman. So the cost efficiency, the transparency, I think that is really something that blockchain cannot be replaced by a traditional finance infrastructure. So in any case, I really appreciate being invited, and I hope that you find this session useful. Follow us on X, either OpenEden, or you can follow me directly as well. So stay tuned with all the products that we'll be launching and all the things that are going to happen, especially next week. Have a good day, good evening. Thank you.